This is my market update for today, Friday, December 23rd, 2022. I'm talking about the PCE report and new home sales. Check it out. So first things first, I want to give a quick market update, just as far as rates and some economic news. So today we got the personal consumption expenditures report, which is one of the reports that I've talked about in the past. So this is just activity, how people are spending their money. And it's similar to the CPI, which is the Consumer Price Index. So the PCE is the one that the Fed looks at. And we're expecting really good numbers today, meaning showing inflation coming down. And so in hopes of rates going down a little bit more, like we saw a couple weeks ago. So the number did decline. So the headline PCE went from 6% to 5.5%. And the core number went down to 4.7%. But they did a revision to the previous month's numbers because we thought it was 6%. They revised that to 6.1%. So it doesn't sound like a whole lot, but it just added kind of a dark cloud to that optimistic number that we got last month for the PCE. So long story short, rates are not getting better this morning. We're still kind of floating where we have been in the last week or two. So I priced a scenario out this morning. Conventional, I just did 20% down, 740 FICO, 5.99% with 2 points. 6.375 was with 1 point. I also checked our good friends Rocket Mortgage because we know that they like to bury their disclosures. Rocket Mortgage is quoting 6.75, so 6 3/4 with 2 points. So again, it's just important to keep people informed out there, have them talk to a local mortgage professional because Rocket Mortgage is easy to use as advertised, but they're not awesome on their products and their rates. FHA, about 5.5 with 2 points, and then 6% with 1 point. So they came up a little bit. But like I said, we're still doing the buy downs too. So I have 2 clients that are purchasing right now. Sorry to let someone in. I have 2 clients purchasing right now, both using the 2-1 buy down and a couple more shopping. So the message about the 2-1 buy down is getting out there. Again, if anybody wants a more in-depth description of that, I have a short video on my YouTube channel, which if you've seen any of my posts, I'm putting more content on my YouTube channel. So please check that out. But I can send you a quick 5-minute explanation of the 2-1 buy down. One that we have in Cameron Park right now, we got a $20,000 credit that's getting them to 3.875 the first year, 4.875 year 2, and then 5.875 if they keep that loan for the remaining 28 years. And if you haven't seen, we did launch a purchase advantage program through Movement Mortgage. And I can send a flyer. I can co-brand this for anyone that would want it. But it basically says, if anybody uses Movement Mortgage to purchase a home before the end of March of 2023, if rates go down and they make 6 full payments on their loan, we will refinance them without any of our fees all the way up until December of 2024. So again, the message that I've been talking about is education and overcoming objections. So that's a great offering just to say, hey, this is where we think rates are going. We can give them the data to back that up. Feel free to use any of my content that talks about that data. We're already seeing what I was talking about in October coming true. So that trend's continuing. And then we can say, hey, if we use Movement Mortgage, they'll waive their fees, which is about $1,500 on the refi before December of 2024. Okay, so going back to some more of the economics. Does anyone have questions on the PCE or where rates are at? Any feedback there? Oh, Tom, you're muted.
How about the VA loans?
VA is going to be right in there with FHA. So they're still going to be mid 5s with a couple points, about 6% with 1 point. Yep. I got one of the ones I'm doing, we locked, it's closing on Tuesday. We locked about 3 weeks ago, and they're at 5 5/8 with a point, and they're doing a 2-1 buy down. So we've come up about an eighth or a quarter percent since we saw the bigger drop in November, or earlier in December, rather. Cool. So moving on. So we got the revisions for the CPE from last month. If we take the average of just the last 2 months for CPE and you annualize it, which is a very small sample, it's not showing a longer term trend. But remember, we thought that things were going to start coming down in November, which they did. So if we annualize the last 2 months, that's 3%. And the Fed's target for that annualized number is 2%. So that's good news. I think that going into next year, we're going to see rates about 5%, and we're going to see the Fed slow down on them hiking the Fed funds rate so they don't completely throw the country into a recession. So good news there. Bad news, one of the reasons that the favorable PCE number from this morning is not having the effect that we had hoped with making rates come down is the Senate passed a $1.7 trillion spending bill in the Senate last night. It was a bipartisan bill, so it goes to Congress next, and we think that that's going to get passed. That bill included more relief for Ukraine. It included Medicaid. It included $800 billion in defense spending, election security precautions. They had limitations on TikTok written in there, a whole bunch of stuff. So $1.7 trillion. We don't have the money to pay for that. So what that means is the government needs to finance it, which means they're going to put out more treasury notes, and they're going to put more investments out there in the market, which supply and demand, they put more treasury out, demand goes down, and the prices go down. So it's not good for interest rates. When we get the CPI and the PCE numbers for next month, we should see a little bit of a drop. Sorry, I missed a comment there? Oh, I thought I heard someone say something. Okay, the next thing we got this morning was housing data. So we got a new home sales report. New home sales are up 5.8% month over month. Inventory is down 2.3%. So one of the things that you might hear on the news, I think there's like an 8.6 month supply that people are talking about. And that was kind of headlined in the new home sales, but that's not accurate because there's 461,000 units inventory available. Only 64,000 of those are completed homes. So when they look at that inventory figure, they look at builders, and that counts a hole in the ground. So 8-month supply, if you're hearing that sensational headline, it's BS. Inventory is still extremely low. I'd love feedback from any of you guys. I mean, I feel like demand is high. Buyers are just still kind of backed off from the holidays and from higher rates. But I think that as these rates decline in the beginning of next year, there's going to be a rush of activity. I think we're going to be really busy this springtime. Is anybody else feeling that, or what are you seeing on inventory in your local markets?
Yeah, I would agree with you, Ben, that it's very low. A lot of motivated shoppers though still, so that's a positive.
Yeah, that's great feedback. I appreciate you sharing that, Tom. I have a guy, he's out in the Bay, and we did a pre-qual. He's pretty confident in his credit. He's ready to go. He doesn't want to pull credit until he's closer to writing an offer. His price point's $750, and he's like Vallejo, Fairfield, that area. And there's, in the last 2 weeks, he's already seen everything on in that price point, and there's nothing new in the last 2 weeks. So I know that market's a little bit different than Sacramento. But I think that's a decent indication of what we're seeing, right? People probably don't want to list their house on the holidays and have to have it all cleaned up and people showing it, going in and out. But yeah, we'll remain hopeful for the springtime. And then also, so I'm going to send out a formal announcement. I'm not doing my Mortgage Monday email on Monday because we're closed, Christmas observed, but keep an eye out for Tuesday morning. And if you want to get this sooner, just shoot me a text or email. But for those of you that missed my Taco Tuesday event in December, I had a guy that came out and talked about 1031 exchange and how that works. If somebody approaches you and they have rental properties or they're an investor of some kind, this is a tool that you guys really need to be comfortable with, in my mind. And there's a good idea for prospecting to get listings. So there's two videos, or there's 3 videos on my YouTube. You can watch the whole 1031 exchange presentation. It's really good. The guy is a really good speaker. So the first part was 1031 exchange. And this month or next month in January, my Taco Tuesday, I have a commercial broker coming out. And it's Jack Blackman. I've known him for probably like 4 years now. Dude is super on top of his game, knows his stuff as far as commercial goes. So he pays out a 25% referral fee on commercial. So even if you don't want to mess with commercial, I think it's important that you have a referral source that's reliable for commercial stuff. And additionally, to tie it all together, one of the strategies from the 1031 exchange class is finding people that own vacant land or residential rentals. And those people can sell those pieces of real estate and 1031 exchange into a commercial property. So why would someone do that? Typically, early on in our lives, we buy real estate hoping for appreciation. I mean, right now with higher rates, cash flow isn't a huge thing. So you're buying for appreciation. Well, once you hold a house for 10, 20, 15 years, you've got your appreciation. Now, what do you do with that appreciation? How do you make it work for you? The best thing to do for cash flow and just for the luxury of life, if you're managing 5 single-family rentals, that's a lot of landlord work. If you're paying a property manager, you're paying 20, 30% off top, right? So the idea is to talk to these people that own residential rental properties or even vacant land and explain to them that they can sell those properties, do a 1031 exchange, don't pay any tax on the profits, and roll it into a single commercial property that's far lower maintenance. You can do a triple net property and just collect a check every month. So I think this is a really good niche for people getting near that retirement age that have a little portfolio or even a large portfolio, and start mailing them, get on white pages, call them, dial them, go knock on their door, find out where they live or whatever. But I think that's a really good strategy. So January 10th at 11 a.m., I think I'm going to have a really good turnout for this Taco Tuesday. So I actually got a bigger space. We can accommodate like 30 to 40 people, but it's going to be a really, really good event. So again, I'll send the details out. If you want those today, shoot me a text and I'll get you the Eventbrite link. But I'm excited to have some people there. So we can get excited for 2023. I think there's lots of opportunities. So before we drop off, do you guys have anything for me? Any questions about what's going on in the market? Loan questions? No? Sounds like everyone's good. With a thumbs up or a hand raise, who is interested in coming to the Taco Tuesday on January 10th? Is that exciting for you guys? Eric, I see you. Tom, I see you. I got a bunch of headshots for other people. Elena, I got your thumbs up. Right on. Well, Jordan, there he is. What's up, man? Well, cool. If you guys don't have any questions for me, I'm going to jump off. I know everyone's pretty busy, looking forward to the holidays this weekend. So hit me up. Let me know if you need anything. Shoot me a text if you want the Eventbrite link so you can get that Taco Tuesday on your calendar. And I hope everyone has a terrific holiday. Enjoy your weekend. Take some time off. And Hopefully I'll talk to you next week. Thank you so much for watching this market update. If you thought it was helpful or if you learned anything, please like the video and subscribe to the channel. Also, if there's any topics that you would like me to make a video about, please leave them in the comments.